Hi, everyone. This is Carl with Remax West, and today we're diving into everything you need to know about getting a mortgage with Daniel Cece, who works with Next Financial. So, whether you're a first-time home buyer, upgrading, or refinancing, this guide is something you don't want to miss. The mortgage process oftentimes can feel very overwhelming, but it doesn't have to be that way. So I'm here with Daniel to simplify the process. So make sure you stay tuned until the end. Daniel is going to be sharing some very insightful industry tips and secrets that a lot of people don't know. This could make all the difference for you in your home buying journey or even your refinancing journey at the moment. So welcome, Daniel. Um, yeah, Daniel, would you like to just tell us a little bit about yourself and the type of clients you typically work with?
Yeah, sure. So like I said, my name is Daniel. I've been in the mortgage industry for about 5 years now. It's been an amazing journey so far. A lot of craziness since I joined. I went through a lot of different changes when it comes to just interest rates alone, right? I saw very low, I saw very high, right? So definitely learned a lot in my time as a mortgage agent so far. I typically work with first-time home buyers, people that are looking to refinance a mortgage, and then any business owners as well. I find that business owners, they need a mortgage agent more than anybody because they don't fit the right criteria that, let's say, a bank would necessarily go through them with. But yeah, I tend to work with a lot of business owners as well. So yeah, Next Financial, we're a brand new company, been around for a while, but we reestablished ourselves. And yeah, we're ready to take over the mortgage market. So yeah, anybody that's looking to get pre-approved or looking to refinance, definitely we can help them.
Awesome, awesome. So, Daniel, what are the key factors lenders look at when approving a mortgage?
So there's a few factors. We like to call them pillars. So they're going to look at your credit score, your credit history. They want to make sure that you have good established credit. You haven't missed any payments. You're not in any defaults. They want to make sure that you have some good credit established, so it limits the risk when they lend to you. Another one is they're going to want to see income, stable income. So if you're just working part time, you just got a part time job, they're not going to really look at that, right? Because you need to have, at least a part-time job, you need to have 2 years of history to kind of use it. When it comes to like full-time employment, as long as you've been in the same industry, you can change jobs, but as long as you've been in the same industry, they'll pretty much accept that. They're going to want to see also that you're full-time, not contract
Mm.
or you're on your probationary period. They're not going to see that. Contract will be okay if you have many years of contract renewals, but if it's your first contract, they're going to be very hesitant on that because you don't have history of being on a contract, right?
Mhm.
So
Makes
they're going
sense.
to be very weary on that. But there's ways around it. But that's why working with the mortgage agent, we can find out what the best option would be, what might look to approve you on that.
Very good.
Another one would be your down payment. So they're going to want to see that you're going to have enough down payment to cover the house that you're looking for, right? So if you have a good strong down payment, that'll also help because it's going to bring down the loan to value. And yeah, just those are the typical um, things that they're going to want to look at, and any debts you might have as well. So trying to limit your debt when buying a home is going to be key because it's going to affect how much you're going to get approved for. So if you have a car loan, visas, lines of credit, that's going to really affect what you're going to be able to afford, and it's going to drop your approval down substantially. And the lenders are going to look at, can you afford getting a mortgage now with all the debt you have, right? So you really have to assess your situation and make sure you're ready to buy. So focusing on those four key points are going to really help first-time home buyers, especially get ready for the home buying process.
Okay, very good. Perfect. Thank you. And a lot of people have the misconception that you have to put down 20% for a down payment. Is that the case always?
No. So it's good to put down 20% because it's gonna get you access to a few things. Like you're not gonna have to pay mortgage insurance. You're gonna decrease your loan to value. So the lender's gonna look at that as a positive, and they're gonna they'll be willing to play a little bit more when it comes to the rates that they'll be able to offer you. But you don't need 20% every time, right? There's a down payment structure, and we can go more into that if anyone has any questions, but the minimum down payment is 5%. So anything below 500,000 would be a minimum of 5%. between 500,000, and the new rules are coming out, but I'll just explain the way the old rules are for now, just to keep it simple. But between 500,000 and a million, it's 5% on the first 500,000 and 10% on the additional amount over 500,000. So it's a little bit confusing, but just a simple way to go about it is, let's say you're looking at a home for 600,000, you're going to need a down payment of $35,000,
Mhm.
right? So it's pretty confusing calculation, but it's once you understand it, it's pretty simple. And that's what I'll go and work on that with my clients to make sure that they do have enough to buy the home that they're looking for.
Perfect. In Canada, we have something called a stress test, and a lot of people don't understand what a stress test is.
Yeah.
Do you mind explaining that for us a bit?
Yeah. So
Oh.
the stress test is basically the lenders are looking at, can you afford your mortgage if the rates were to increase
Mhm.
over what you got currently, right? So before, when the rates were really low, you were getting stress tests at 5.25, right? We're not seeing that anymore. So what we're seeing is whatever your contract rate is, whatever the bank is offering you as a rate, they're going to apply a 2% increase to that. So let's say your rate's 5%, you're going to have to actually qualify at 7%. So when I was working with clients during COVID and the rates are really low, they were getting approved for much higher than they would be now, right? So they always ask me, Daniel, I make great money. How's my approval going lower? Well, it's because the rates are at a different point now that you have to actually qualify your contract rate plus 2%. So yeah, it definitely lowers your approval amount, but the bank needs to be assured that you can afford your mortgage if the rates did go up.
Okay. And you mentioned approval. What is the difference between being pre-qualified and pre-approved? Does it even matter?
It does. Pre-qualification is just a simple kind of mathematical equation that you can do online with anybody. It's just going to look at you can input it yourself, do it yourself, but it's not a guaranteed number, right? It's not like there's a lot of other factors that go into it because you can put in any number you want and it'll spit out a number for you. Whereas a pre-qualification, and at least for myself, is I go into everything: your documents, your credit history, pull your credit, make sure everything is in good standing order there. I verify how you earn your income because just because let's say you're a business owner, you make $80,000 a year, you don't actually make $80,000 a year as a business owner because you do have write-offs and everything like that. So there's 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 the pre-qualification just to kind of get you started to kind of see what you can afford, but then there's a pre-approved that's going to actually make sure that you can afford that specific range, right? So pre-approved is a much more. There's much more to go through, and I always tell my clients, you can go get a pre-approval, pre-qualification, but it's not gonna be accurate, right? And if you want to be serious, you want your buyers to take you seriously, being pre-approved is what you want to do before you start your home buying process.
Yeah. I've heard of a lot of clients when they get a pre-qualification and they feel as though they're ready to go on the buying process. They make an offer and within the 5 days condition, they realize that they can't afford the property because they only went through pre-qualification and not pre-approval. So
And
yeah, I
yeah, and
definitely understand what you're saying.
that's something I do with all my clients is it saves a huge step when you're actually buying a home. If we get you pre-approved accurately at the beginning, I'm gonna have all your documents ready to go. I don't need to ask you, hey, can you give me this? Can you give me that? I'm gonna have everything ready to go. I went over it as if I'm the lender. So I'm sending it over to the lender as a full package, right? So it's gonna increase not only how quickly you're gonna get approved, but it's gonna also increase the time that you can limit on the conditions, right? So you're gonna know within a couple days because the package is ready to go. We don't have to, hey, you forgot to give me this, you forgot to give me that. I'll have everything ready to go as a full package and send it over to the lender. So it also helps in that speeding up that process.
Very good. Awesome. And you did mention that you work with a lot of first-time home buyers. So what are the common mistakes you see first-time home buyers making during the buying process, and how can they avoid these pitfalls?
So the number one mistake is I've seen, even just from my realtor partners, I've seen when they have sent me clients, they don't have a pre-approval. They go look for homes. They don't even know if they can afford them yet. So the biggest mistake I see is people not getting pre-approved, right? You need to know where to start. You're not gonna just, one day pick up, hey, let's go look for a house, but you don't know what you can afford yet, right? You're not only wasting your realtor's time, but you're wasting your time, right? You're also gonna get your hopes up because you're gonna see all these homes that you love, but when you do a pre-approval, you might not be able to afford them, right?
Mhm.
So definitely not being pre-approved before you start your search is one of the biggest mistakes. Not understanding the total costs
Mm,
associated with buying a home as well, the really big one. Some people just think they need to have the down payment sorted out, right? But they don't know that there's land transfer tax, legal fees, any other, home inspections, utility bills, monthly moving expenses. There's so much that goes into buying a home, not just a down payment, right? So you want to make sure you have a we usually say 1.5% to 4% of the home's purchase price set aside in closing costs.
okay.
And a couple more is taking on a lot of debt. You don't want to take on any debt while looking for a home. You want to kind of limit what you're buying. The lender doesn't want to see, $5,000 here being taken out, $4,000 there. You buying a new car, right? It's going to really affect things, right? So you want to kind of limit your spending until you buy your home. After you buy your home, you can go crazy, right? But
Mhm.
you want to kind of limit and not have much movement in your accounts because it's gonna really impact what you can afford. I've had clients before where you could tell them a million times, but they'll still go buy a car, right? You got to, as a mortgage agent, you got to really work with your clients and make sure that they're not doing anything that's going to affect their home buying process, right? Because if you go buy a car before you buy a home, now your approval might go from let's say 500,000 down to 400,000, right? Because it could affect, depending on what car you're buying, it can affect you heavily, right? So another one is, not locking in a rate. A lot of people think, oh, I could just get pre-approved. That's okay, right?
Mhm.
We see it time and time again. People doesn't it doesn't take 1 week to buy a home. It could take 2 3 months. What if rates go up in that time? You want to make sure you have something locked in so that way, in case the rates do increase, and right now we're not seeing that, but if the rates do increase, you're locked into something at least lower than what maybe you would have gotten if the rates go up a bit, right? So definitely locking in your rates is a big one during the home buying process. And then finally, like, don't let your emotions drive what you're doing, right? Don't just jump into something because you want to buy a house. Make sure it's right for you. Make sure you can afford it. Make sure you're not going to be stressing, about day to day, because you're gonna have other bills once you buy a home, and you don't want to be paycheck to paycheck when you buy a home, right? So just don't let your emotions get the best of you. Make sure you can afford what you're buying. Don't buy right to your max. It's there as a tool, as something to help you, but I always tell my lenders, leave yourself a bit of room so that way you're not stressing month to month.
Mm. No, that's amazing advice. And I especially like the aspect where you mentioned about how much you should have for closing costs.
Yeah.
Especially when you're purchasing in Toronto, a lot of people don't understand that you need a little bit more money to close in Toronto because
Yep.
of the double land transfer tax. So, as Daniel says, everyone, to have 1.5% to 4% is crucial. I think those are some amazing points there.
Yeah.
So, how do you think buyers can improve their chances of getting the best mortgage rate?
Yeah. So getting the mortgage rate, you're kind of uh, at least with the A lenders, they're gonna want to see, you have great credit, right? You haven't missed any payments on your bills, you haven't defaulted. That's gonna really help them when it comes to, negotiating the rate for you. If you missed a few payments, they're not gonna want to negotiate that because they're already taking a risk per se, right? So having lower debt to income as well. So limiting the debt you have will also help because you're going to be more attractive. You don't have so much debt on the go. Have a larger down payment too, right? So if you have a larger down payment, your loan to value is going to be a lot lower. So it's going to be in their. They look at that as an advantage because you're not there. If they had to sell the home, for example, if you had the default on your mortgage, they're going to be able to make a bit more money. They'll be able to, at least get the money back that they lent out, right? So that's going to help when it comes to ease their mind, giving you a better interest rate, and then shopping around. So I see it time and time again. People they just go to their bank and think their bank's going to give them the best rate, and without even doing any shopping around, I already had access to better rates, right? So yeah, very very important to shop around when you're working when you're looking to buy a home because it could potentially save you a couple $1,000s over the term of your mortgage.
Makes sense. That's great. Daniel, I get this particular question a whole lot, and sometimes it's difficult to answer, but I want to know your take on it. So, what's your take on fixed rate versus variable rate, and how
Yeah.
does the buyer decide?
That's a big one, right? Like nobody really knows where rates are going to ever go, right? We can always hope, we can always listen to, the news, but we don't really ever know where rates are going to truly go, right? I'll give you my personal experience just because I think it's a really good one for first-time home buyers to understand. And keep this in mind, I wasn't a mortgage agent when I bought my first home. So me and my wife, we had just gotten married. We were looking at buying a condo, and basically we were everyone's telling us get a 5 year fix. That's what everyone does, 5 year fix. So we end up buying our condo, 5 year fix. We end up getting pregnant, a year later, and we sold our home. Right now, when you're in a fixed rate for that long, you're gonna pay a hefty penalty, especially with you if you're with a big bank. You're gonna pay a pretty hefty penalty, right? So we were hit with a pretty big penalty, and that kind of opened my eyes. I'm like, I wish someone would have told me my options when I was buying a home, and you know, kind of guided me. The bank didn't guide me. They just said, okay, yeah, let's do this. They didn't say, hey, what are your goals? What are your plans for the next 3, 4, 5 years, right? Do you plan on having kids? Do you plan on buying a bigger home? So there's a lot to that goes into it when you're looking to buy a rate. So sorry, when you're looking to buy a home. So what I normally do with my clients is I talk to them. Maybe a 5 year fix is too long, right? Especially if you're buying a condo, you might outgrow that really quickly, right? So maybe you don't want to be stuck in a 5 year rate,
Mhm.
right? Maybe you want to be in a 3 year, right? We can also look at monoline lenders where if you were to break your mortgage, some monoline lenders, their penalty is very low compared to what a big bank might be, right? So fixed are great if you're looking for stability. If you don't want any fluctuations, you just want to pay the same amount every month. You don't want to worry about any of these rate announcements or anything like that. Fixed rate is really good because it's predictable and it's going to protect you against any hikes that might happen, right?
Right.
Variable is really good in terms of it's going to kind of help you when it comes to the rate decreases, right? Now we saw a lot of people struggle with variable over the last couple of years,
Right.
but I feel like we're going to be in a good spot going forward with variable rates. And variable rates are good if you're buying a rental property, you want to sell it, afterwards, or if you're not looking to stay in that home for a while, or if you think rates are going to drop even further. Variable rates are really good just because they offer that flexibility, right? You have a bit more not leverage, but you have a bit more of a way out if you did need to buy a home, a bigger home, where you need to sell the home for any reason, right?
Mhm.
And then yeah, if the rates decrease, you're not stuck in a higher rate. So your rate will get you'll get the advantage of having lower rates over time if they were to decrease.
Gotcha. Yeah, that does make sense. Perfect. Uh, so regarding refinancing, what should Canadian homeowners consider when they're refinancing their mortgage?
So there's a few things they want to consider. They want to make sure that it's right for them, right? So I always tell my clients when I'm working with refinancing clients is, does it make sense? Like, are you just doing a refinance to buy a luxury sports car or something like that, right? You want to make sure that you're doing it for the right reasons. Paying off debts is a really big one. If you have, especially during the Christmas season, I see this all the time. People are living paycheck to paycheck already, so they have to utilize their visas or their lines of credit when buying gifts, right? So in January, you're going to get hit with this hefty bill for all these debts you might have accumulated.
Mhm.
Doing a refinance for that situation might make sense, right? Because you're going to consolidate all that debt into your mortgage. Your payment might go up maybe a couple $100s, but it frees up so much cash flow for you because you don't have to worry about all the other bills that you're going to be having now, right?
Right.
So after the holiday season, I see it really pick up with refinances just because it makes sense to do so, right? You're not going to have to pay 20% on a Visa card, 15-20% on a line of credit. So you're going to really free up a lot of cash flow just by doing a refinance like that. You want to access your home's equity, maybe to build an extension to the home, right? That's another good reason why people will do a refinance is they want to, upsize or do renovations. They don't want to use, lines of credit, or they don't have the money saved for it. They use their home's equity for that, right? So
Mhm.
um, it also helps with possibly lowering your interest rate. If you got interest rate maybe 2 years ago, you want to kind of see what you can get on the market, that's another reason why people are refinancing. You want to make sure that your refinancing loan is going to make sense as well. You don't want to just go into a lower rate. It might not do anything for you.
Mhm.
You might only save a couple $100, but then you're going to have all the legal fees to close on the mortgage that might just make that go away, right? So
Right.
yeah, just making sure that there's a break even point for you somewhere along the line of that new term. And that's all the stuff that I'll do for the client, right? They don't have to worry about doing that themselves. Like I'll go through all those and analysis with them
Hmm.
to make sure that it does make sense, and they're not just doing it and going to get themselves in a worse position, right?
Got you. Perfect. That's awesome because a lot of, you know, potential buyers who are on the sideline don't understand that purchasing a property earlier or sooner than later can really work in your advantage because you're building that equity. And then you
Mhm.
can use that equity, you can refinance, you can do whatever you like just to maybe purchase other properties or purchase other things you might need throughout life. So yeah, it's a pretty powerful tool when it comes to wealth building.
Exactly.
Daniel, I really appreciate it today. This has been extremely insightful. And if anyone would like to reach out to Daniel, we're going to have his contact information below. So thanks once again, Daniel, for coming on with us today.
Yeah, no problem. Thanks for having me. I really hope that this video people learn from it because it's really important when buying a home. The mortgage is the most important part, right? The
Mhm.
realtor is going to help you get into the home. I'm going to help you get the keys, right? So you
Right.
wanna you wanna make sure that you're working with somebody that's going to take the time. They're going to be ready to help you when you need it most. And that's one more thing that I'll leave off with is I make time for my clients. Most houses, most deals, I'm sure they're not getting done at 2 o'clock in the afternoon when the bank's open, right?
Yes.
They're getting done at 8 o'clock, 9 o'clock at night. So as long as a client lets me know, I'll make sure to make myself available and help them get, work numbers or see what they can do to win that house, right? So yeah, just that's just one little added benefit of working with me is I'll be able to make sure that you are taken care of properly.
Perfect. That's awesome. Thank you, Daniel. We appreciate it.
No problem. Thank you.